Hello, it's Greg again. Hope you guys are doing well. So let's talk about what information is actually needed to secure a loan. And this is not substantially changed. You're going to submit personal financial information and you're going to submit some business financial information. So let's go through these scenarios. Personal financial information, it is what it means, just personal. Whatever accounts you have, assets, liabilities, how much you owe on your home mortgage, the value of your home, if you've placed the value on your business, your owner. Typically, banks ask for personal financial statements from those who own more than 20% of a firm. That also means, your credit report, credit history, and a listing again of your financial assets and liabilities. All banks have different types of financial statements, but basically just list what you owe to someone, and those are obviously liabilities, and then what you own, those are assets. And hopefully you have more assets than liabilities, which means that you have a positive net worth, which is not a bad thing at all. Your credit score does play a role in this. Most businesses, those of you who may have a corporation, it provides you some legal protection, but in order for you to borrow money without personally guaranteeing it, your business would have to be quite substantial in terms of its assets and liabilities. You'd have to have a fair amount of cash flow and a fair amount of cash on hand. So in that scenario, actually, your business really wouldn't need any money, but if you want to borrow on an unsecured basis, that's a different conversation than most small business owners are able to engage in at that particular time in their business, in their life of their company. But you can get there. It's not insurmountable. So that means you have superior business net worth. Your sales are great. Your margins are great. You have strong cash flow, and you just have a phenomenally run company that is a premium asset. So personal financial information, yeah, that's relevant. And let's look at business financial information. And this goes back to your tax returns, and business financial statements are more than just your tax returns. You should have an accountant preparing separate financial statements for your company, perhaps on a quarterly basis. And there's a particular type of accounting, which is called accrual-based accounting, that your accountant should be preparing your statements based on an accrual base, not cash-based financial statements. And that distinction is big with some banks because accrual-based financial statements allow a banker to look at some information and to assess the business in its entirety. Cash-based accounting statements doesn't give you the same look. So that's something that you need to have a conversation with your accountant. So make sure you get accrual-based statements as you can. It's worth paying the extra money. It just gives you a better picture of your firm. And it gives the bank a better picture of how your company is doing. So within this booklet I have called Trade Secrets, it does have a section in there regarding this. So if you take a look at that booklet, we can go through it at that particular time if we have a conversation offline. But your personal financial information is a part of assessing how well your company's doing. And obviously your business financial information is important. And then the type of financial statement that you have prepared for your company, that's important as well, because that gives a banker and banks rather some critical information about your company and its cash flow. So that's why this conversation is critical. We'll talk soon. Thanks for your time.